If your Elliott wave count keeps changing every time price moves against you, you're not reading the market, you're forcing the market to fit your bias. In this video, I'll show you how to identify clearer wave structures and avoid the mistakes that trap most traders. If you have any trading topics you'd like to discuss, just press 2 inches, comment, I'll clear things up for you. In the general picture, it is one of the principles, or what many people call a theory. This principle believes that the movement of the price in the stock market will have the shape of a swing. Swing, right? The shape will be like this. If you look at this picture, you will see the 2 properties of the swing. The first one is that it goes up and down. It's going up and down for a while, and it's going to repeat. It's not going up and down and then it's over. It's going up and down over and over again. It's going up and down over and over again. It's mainly caused by thoughts. It's caused by emotions. And it's caused by the actions of a lot of people. A lot of people in this place are investors. It means it's going to be big or small. When they make a trade or invest, it will reflect in the price graph. For example, in this picture, if you look at it, it will rise, starting from the left-hand side. At first, the price goes up, then it goes down, and then it goes up again. This time, it is stronger than the previous time. There is a short drop, and then it goes up at the end. These events are very reflective of the actions of people. For example, in the first period of the left hand, many people will be careful because the price should have fallen first. Therefore, people will gradually buy in hesitation, not sure. After that, when the price starts to go down, it is a shortcut. People will be afraid, both afraid and not sure. After a while, the price went up again. At this point, there is excitement and confidence. Everyone will come to buy together. After buying, the price goes up. It becomes a good price. People who bought from the first round will start to worry. Excitement is gone. Start to sell for profit. The price will go back. But because last time it was very exciting, everyone goes shopping. People who get off the car or can't get in time will get sick, and the mountain will try to buy more, hoping that the price will rise high. Finally, the price doesn't go back. When it comes back, there will be a sale and the price will fall back. This idea makes investors think about the principle. This person's name is Mr. Elliott. He came up with the principle called wave principle in 1930, and he got a promotion from an important foundation of Dow theory. You can see Dow theory in the channel. There are 2 episodes, but I would like to summarize briefly for you to listen to this. Dow theory, one of the points, he said that the trend, there will be 3 types of milk: the main milk, the second milk, and the third milk. For example, if you look at the main trend first, you will see that it is a rising market. The rising market will make the higher high or the higher high, and it will make the higher low as well. Next is the second trend. Dow Jerry said that the trend will move in the direction of the main trend. Therefore, the main trend is an upward market. The long trend is a downward market, but it is a short downward. It occurs when the price rises or falls. Finally, the trend is the trend. The trend is the movement of the price hidden in the main trend and the long trend. For example, on the left-hand side, the curve is the main curve, but there is a slope curve. It's in this curve. Another point is in the middle. It's a vertical curve. It's a short downward market, but there is a slope curve. It's in the vertical curve again. Mr. Elliott concluded that it was one of the principles. Basically, I would like to show you an example of an upward-leaning market, but this method can also be used with a downward-leaning market. Mr. Elliott said that the movement will be a set. One set will consist of an upward leaning, which is in this picture. The upward leaning is called a motive wave. Motive wave will consist of 5 legs or 5 shifts. The way to count is to count from the far left, the first point of the shift. The first shift is the shift that goes up. Next, the second shift will rest. The third shift will go up again. It's a long shift. The fourth shift will be a shift again. And the last shift, the 5th shift, will go up again. After that, the Elliott wave says that when the movement reaches 5 legs, there will be a break. The big break is called the corrective wave or the adjustment. We will use the Thai word for adjustment movement. In this adjustment movement, the Elliott wave says that it will have 3 legs, or 3 small movements. It'll be named ABC. A is the extension in the lower leg. After that, there will be a rest in the lower leg. Finally, there will be a descent into the lower leg. Therefore, if we count all the movements, there will be 8 legs, or 8 movements. We call this system 8 waves, and we will give a symbol of 5 to 3. 5 is up, yellow, and 3 is the vertical axis. I have an example for you. You can pause the video and try to draw the movement. The upper leg has 5 movements, and the lower leg has 3 movements. If you have tried drawing, I will take you to see the answer. The answer starts with the upper leg, which has 5 movements. We call it the motive wave. Let's start from the left-hand side. 1 goes up, 2 goes down, 3 goes up again, 4 goes down, and 5 goes up at the end. After that, we can draw the corrective wave. The corrective wave will have 1. When it goes down, it's A. When it goes down, it's B. And when it goes down, it's C. That's it. 8 moves together as one group of the Elliott wave. Next, you may have a question that when we draw it all, what will happen next? Will it go up, or will it go down? Or how will it be? I take you to see the example. This picture is the 8 or one group of the Elliott wave. At this point, there are 2 possibilities. First, there will be another wave that arises from the top. This type of wave is called the wave that is rising, or the price is still rising. Another type, when it ends at point C, it will go down and turn into this shape instead. It's another wave that is turning. In this way, he sees that the rising market has ended and then turned into a downward market. Therefore, in short, Mr. Elliott thinks that these 8 waves will keep repeating. It depends on whether it will repeat upward or downward. This time, the specialty of the Elliott wave is that it has another quality called fractal, or called structure, which is the structure. The same structure will repeat over and over again in many time frames. For example, this figure. This figure is a set of Elliott waves. Suppose it is in a large time frame. It is in the higher degree, or the degree with a high cost. And at the same time, it will have a set of waves in the lower time frame. This lower time frame is called lower degree. Therefore, the word degree is the level indicator of the movement. The movement in each degree has a different pattern, which has a clear gain. For example, on the left-hand side, move 1 and move 2, it's a move up and down. If you zoom in, you may see a move like this. This move is a lower degree move, lower time frame. It's in move 1 and move 2 again. And if you look closely at move 3 and move 4, it's the same pattern. There's a move up and a move down. Therefore, there may be a tendency to hide inside again. Finally, when the price starts to go back or adjust, it can have a tendency to go back to the head and hide. This method is called fractal. We will see these images hidden in many time frames. Start with the big time frame first. Time frame month, time frame week, and you can try to change the time frame. It can be 1 day, it can be 4 hours. You should see the small moves hidden in the big moves again. In other EP of this series, we will roll back and forth between these sets of moves. Left hand is motive wave with 5 legs. Right hand is corrective wave with 3 legs. If I divide it into 2 parts, the motive wave will be easier than the corrective wave on the right side. The corrective wave is more difficult, and I would like to emphasize that it is much more difficult than the left hand. For today, I would like to start with the motive wave first. It has a clear structure and is easy to see. The motive wave is mainly divided into 2 subgroups. The first group is called impulse wave. The other group is called diagonal wave. In impulse wave, the shape is simple. There is a clear structure. Look at the graph and you can tell. The shape is similar to the example that I showed you. The second type, diagonal wave, is complicated from impulse wave. If you look closely at the structure, there will be a part that is similar to the impulse wave and another part that will be different. For example, on the left-hand side of the diagonal wave, there will be 2, 3, 4, 5 movements similar to the impulse wave. But the difference is that the first movement of the impulse wave is easy to see. The price goes up continuously, but the diagonal wave is more complicated. The price will bounce back and forth in the first movement. Another example is the right hand. The right hand moves like the impulse wave, which is 1, 2, 3, 4. But there will be a fifth movement that will bounce back and forth, different from the impulse wave. For this clip and the next clip, we will focus on the impulse wave. It is a movement with a simple structure that can be clearly seen. An impulse wave is a five-wave structure that moves in the direction of the main trend and represents the strongest phase of a market move. Within this structure, waves 1, 3, and 5 are known as impulse waves because they push the market forward, while waves 2 and 4 are corrective waves that temporarily move against the trend before the next impulse begins. Although corrective waves create temporary pullbacks, they do not change the overall direction of the trend. To identify a valid impulse wave, you only need to remember 3 essential rules. First, wave 2 must never retrace beyond the starting point of wave 1. It can pull back significantly, but if it moves below the origin of wave 1, the wave count becomes invalid. Second, wave 3 must never be the shortest of the 3 impulse waves. While it is often the longest and strongest wave, the rule simply states that it cannot be shorter than both waves 1 and 5. Finally, wave 4 must not overlap the price territory of wave 1. If it does, the structure is no longer considered a valid impulse wave. These 3 rules are the foundation of Elliott wave theory and are the first things professional traders check before labeling any wave count. Once you understand and apply them consistently, identifying high-quality Elliott wave setups becomes much easier. In the next section, we'll go through several real chart examples so you can practice counting the waves and verifying whether each structure follows these essential rules. Let's take a look. The first wave is the impulse wave, the first wave. Pause the video. After that, we will try to open the answer. The wave that I got will be like this. The beginning is the bottom point. After that, it will be the first wave. Go down 2, go up, a long way. It's number 3. Go down to number 4, and then go up to the last round. It's the 5th move. Next, we will try to check whether it passes all 3 goals or not. We will check from the first step. Wave 2 must not be lower than wave 1. Actually, looking at it with my eyes, I know that wave 2 is still not the best. But if we try to measure it, we will see it clearly that the second wave is about 80% of the first wave. Therefore, this is considered to be a gain. Next, the second rule says that the third wave will not be as short as the impulse wave. The impulse wave consists of waves 1, 3, and 5. Let's review it again. Therefore, from the graph, we can see that the third wave is not short at all, longer than my friend. Therefore, it is considered to pass the gain. The last gain, he said that the fourth wave will not enter the zone of the first wave. We tried to draw the zone of the first wave, and we can see immediately that the fourth wave is still far away. It's still not close to the first wave. Therefore, all 3 gains are considered to pass. We got one beautiful impulse wave. The second example is similar. It's a rising market and then it goes back down. You can pause the video as before and then come and see the answer. The answer? We will start from the lowest point on the left-hand side, which is this point, and then we will measure the rise up. 1 rise, 2 yaw, 3 rise long, 4 new yaw, and this time the 5th rise will be long enough. We have to check 3 important things first. The second wave must not exceed the first wave. Therefore, if we measure the range, it will be similar to the example just now. At the second wave, it is about 80% through the gain. Next, as before, the third wave must not be the shortest in the 1-3-5 ladder. When we look at the picture, we see the shortest one immediately. That's the first wave. So this button passes the gain as well. Lastly, the fourth wave will not enter the first wave zone. This example is very annoying. If we draw the zone, we will see that the fourth wave almost enters the first wave, so it's still passing the gain. Finally, we get an impulse wave that has a good structure. It's easy to see another one. The last example, the third example. This example is a bit difficult. Some of you will be able to draw it in one way, and the other group of friends will be able to draw it in another way. You can pause the video as before, and let's look at the answer. The first answer is like this. The first point, we will start from here. After that, it will go up 1, down 2, up 3 long, down 4, and up 5. Like this. Check first if it is correct. If it is correct, we will set it to impulse wave. As before, the first step, wave 2, must not go down to wave 1. Looking at the picture, it doesn't go down. Therefore, it is considered to pass the gain. Press the second step. Wave 3 must not be the shortest. Of course, wave 3 is the longest. Therefore, all 3 items have passed the gain. We set it to be a good impulse wave. This time, friends may say that I did not draw like this. I drew another one that will come out like this. Like this? Do you think it's wrong? No, it's not wrong. Let's check all 3 criteria. After checking, we will find that it also passes the criteria. Therefore, now there is a question. Which one is the right one? Is it like this, or is it the first one that I drew for you to see? This question is a difficult question because each investor, they can't count back either. Some people used to say that 20 people can count back 20 ways. This point made many friends stop being interested in Elliott Wave because they see that it has an uncertain system. It depends on the mind and the mood of the person counting. Today I will take you to see the main reasons why investors. The first thing I would like to say is that the starting point of counting is different. Therefore, the result is not the same. For example, the starting point has 2 points. If we look at the yellow point, we will be able to move in one way. But if we start counting at the blue point, we will be able to move in another way. These 2 movements are problems that may be fixed. The main way to fix it is to look at the movement before the face. Looking at the movement before the face may be the previous movement. Therefore, we will find the starting point of this movement easier and more precise. The second problem of not counting the movements is to determine the high point and the low point that are not the same. This problem is a very global problem. If you trade with many currencies, sometimes you will count high and low, not the same. For example, this picture. Let's just take the high point first. I let you try to find the high point. How many points are there in this graph? Some people say that there are only 2 points, but many investors look back and see that there are other points. Are these points high? And is this point high at the end? Therefore, if each person looks high and low alike, we will not draw a line. There will be no fluctuation in that area when we calculate the fluctuation of the Elliott wave. Here's how to fix it. Look at where it is a high point. Suppose we choose this point to be a high point or not. The most systematic way to do it is that we have to choose that point first that we are curious about. After that, we will count the bars left and right. It depends on the number of bars. For me, I used 7 bars in the past. Currently, I may only adjust 5 bars. After we get 5 bars, we will see that the left and the right poles must not have any poles higher than this pole. That's why we set this pole as a high point. Let me zoom in. The point we are interested in is this point. We will count the left and the right poles as 5 poles. The right pole is like this, 1 to 5. The left pole is 1 to 5. Then we will see which pole we have. Is it higher than the pole that the child pointed at? When we look at it, there is no point or any point higher than this pole. Therefore, this pole is set to be a high point. Identifying a swing low follows the same principle as identifying a swing high. First, choose a candle and decide how many candles you want to compare on each side. For example, 5. If no candle within those 5 bars to the left or right has a lower low, that candle qualifies as a swing low. However, if you increase the setting to 10 bars and find a lower low within that wider range, the original point is no longer considered a valid swing low. This is why different traders often identify different swing points. To avoid inconsistency and personal bias, it's important to use the same look-back setting throughout your Elliott wave analysis. Therefore, the way to solve it, we will have to stick to a system that we set from the beginning to reduce the bias in counting. Currently, I use 5 bars, but in the past, I used 7 bars. The third reason why counting waves is not the same is because of the different time frames. For example, on the left-hand side, it is a time frame week. If you are in this time frame and you try to count the movements, you may be able to count like this. The first movement has a starting point on the left-hand side. The screen is removed and comes up to the last point. Count is 1. After that, it came down to 2. Come up again, friends may be able to count 1 point, which is the third point. As for the 4th and 5th moves, it will not be shown in the week time frame. But if you zoom in at 1-day time frame and try to count again, we start counting at a point similar to the previous point. Therefore, we will get the first point as this point. Counted, the move will come out like this. All 5 of them are complete. The first one comes up. There's a long extension. It's number 2. It's going up again. It's hard. It's number 3. The last extension is number 4. And then it goes up, but it can't go up. The momentum is gone. It's the 5th shift. Can you see that the different time frames will make the countdown different? If we look at the left hand, this point is still wave 3. But if we look at the right hand side, we can count on wave 5. Most investors will start with a big time frame, such as time frame week or time frame month. We will try to find the movement in that time frame. After that, we will use Fractal's principle to zoom in to see the movement that is hidden inside again. And the last reason for not being able to count the movement is, it's because of this reason. Elliott wave has complexity in itself, or to put it another way, it's not easy. It has difficulty and chaos that I myself almost give up using this method. Therefore, if we want to increase the efficiency of counting to be more precise, we need to find a tool to help. This tool will help our counting. It's as much of a system as it can be. And what comes from the word system, we will have to use the number to control instead of using the mind. That thing is called Fibonacci ratio. In the next clip, I will take you back to see the motive wave again. But we will use Fibonacci to determine how to calculate to be more efficient and more accurate. And see you in the next clip. Don't forget to follow us. If you have any trading topics you'd like to discuss, just press 2 inches. Comment, I'll clear things up for you.